Piper, and I want to tell you today how I use Elliott Wave Theory in connection with Bitcoin and later Ethereum. I'm going to use the current collapse from the 20,000 level as an example here. It was fairly clear when we got to about 20,000 that we were definitely overdue for a sell-off. We weren't sure when it would come in, of course. That's not the way the things markets work. But we then saw this clear ABC decline. ABC is one of the key building blocks of Elliott Wave Theory. And the big question at that point was, is this the end of the matter, a complete ABC, or is it just part of a bigger decline? We then saw another ABC, and at that point we knew that it was actually a bigger decline coming in. And the next question was, is this a complete ABC, and are we now going to fall back? Or is, in fact, the ABC itself going to extend? And it did extend. So we saw a B wave and a final C wave. You often find parity between the A wave and the C wave. So that was about 10,500 up to 16.5, about 6,000 points. And here we had 12.5 up to 17 a bit, so about 5,000 points. So a bit less, but still qualified. We then got this decline here, but at this point we were looking for a peak. It was quite clear that because of the wave formation here, that we were due another leg down, and this more impulsive action sort of confirmed that. That's how the ABC pattern works. We then got a clear 5-wave move down to there as a 1 wave, A, B, C, 2 wave. Clearly expecting more downside. 1, 2, 3, with a fairly subnormal 4 buried in the action here. We'll look at a little more detail later. So that's a 1, 2, 3 form. Now that could be complete, and again we've got the same dichotomy. Normally a C wave is 5 waves down. So the big question right now as we look at the chart, obviously you can't see the right hand side of the chart, you can't see this action here, if only we could. So the question is this rally here a corrective move with a 5th wave to come, or is it have we seen the beginning of a new rally? So a critical question, those who want to start going into Bitcoin. Personally, I think we're going to see a very strong move once this decline is over. So I'm very keen to get in. I have been buying some here during the course of this rally, but if we go down lower, I want to be buying more. I'm buying and holding. My strategy is to risk money I can afford to lose, as it were. I don't want to use stops, that kind of thing. I mean, you can do that, but obviously you do that, you get stopped out. Far more complex process. I do that as well, in fact, but my main strategy is to buy and hold. Right, looking at this chart, this is a 5-minute chart, previous chart was 4 hours. Right, turning to this, it's slightly more complicated. The most obvious count here is we've got a 1, 2, 3, 4, and then 5. All these ways do subdivide the 5s themselves, part of the theory, that everything breaks down different levels. We then got what looks like an ABC here, 5 waves down to there. I won't subdivide everything, it get rather confusing, I think. ABC to there, so that is a 2 wave, or it could be a B wave. So there are 2 basic possibilities. Having seen the 5 waves up, we're looking for more upside. That's now come in, and I believe we're seeing 5 waves, 1, 2, 5 to there, 2, and then 5 up to there, 4, and 5. Right, so that could be the peak of an ABC, or it could be a 1, 2, 1, this could be a 2 wave. Whatever it is, it's going to go a bit further down. There are alternative counts, again I won't go into a whole lot because it is slightly confusing at this point. But this could all be a huge wave 1, not huge but quite big. I mean, it is quite large, it's almost 3,000 points. Anything one you like about Bitcoin, it does in a day, just over a day, what the Dow, for example, could take a whole year to do. So we're seeing a 30% rally in a couple of days. It's from a trading point of view, I really like that. I know many people don't. They prefer to trade what they know. But for me, this kind of action is sort of God-given. It won't last forever. I mean, as Bitcoin gets bigger, and the wave pattern suggests it will get bigger. I mean, there are people saying it won't, but I believe it will. I believe the institutions are just getting involved. The bigger players are getting involved now. And they're looking for lower prices to buy, and this is their chance. I believe this will be, this decline is when we'll see some really big money going into Bitcoin, and the subsequent rally from here could be enormous. So it could be a great time to get on board. But this is going to happen first, and there are three alternatives. Either we see a smaller decline, as in the 1-2 count, or we see a bigger decline, down to here maybe, and the second count is where this is all a big one wave with an A, B, C. Okay, so down to 10, so which is an obvious level. Those of you who want to take it seriously, then Fibonacci retracements measure the distance. This is travelled, about 9.1 to 12.1, roughly 3,000 points. So apply the Fibonacci levels, 61.8% to 3,000, get about 1900. So that would actually roughly take us to around this level here for 38.2 retracement. I'm working it out very, very roughly. And about here, I think 38.2, but that's very approximate, better to work it out yourself. Now, there's one alternative, which is an important alternative. This is the complete A, B, C, right? If we see that, and this starts to really motor, then I think we're going to see the target at 7, 6, 8,000 that I've already discussed. So but that's the three alternatives we're looking at. What I'll be doing is gauging how this decline happens, gauging the future action to determine which of these three alternatives is important. So I'll be looking for the form of this decline. If it's an ABC, stays like an ABC, that will be pretty strong evidence that we're going to see that we've seen the lows, we're going to go higher. Starts looking impulsive, then that'll be fairly strong evidence that we're going to go down to 7,500, 800, 8,000, and that the buying opportunity will be lower down, which would be good news for people who want to buy, obviously. But this is just typical market action. Markets are always going too high, going too low, fear at the lows, greed at the tops, and that's how they work. And I mean, people complain about pump and dump, but basically the whole market mechanism is a pump and dump type procedure on a grand scale. It's not actually, nobody's doing it deliberately. Nobody's actually trying to pump and dump people deliberately. It's just the market mechanism does that precisely. I'm not condoning deliberate pump and dump. Let me get this right. I'm not condoning deliberate pump and dump. You know, that's abhorrent in some ways. You're trying to trick people into doing things, but the market mechanism is actually designed to do it all by itself. And not designed, but that's the way human psychology works. We get greedy at the top, fearful at the lows, and we react instinctively rather than thoughtfully. Reflex action, doing the wrong thing at the wrong time. So don't do that. Right, turning to Ethereum now. This is the 1 hour chart. And Ethereum didn't peak in mid-December as did Bitcoin. It managed to see a very interesting, very good rally actually, up to 1440 thereabouts in the middle of January. In fact, the whole altcoin movement did well in the middle of January. My thinking actually was that Bitcoin might well fall back, but the altcoins would take up the slack, as they did. But it all went wrong in the middle of January. So I count this as an ABC, A, B, C down to there. Then there's sort of almost a triangular type B wave, followed by an A, B, C. Now the count's a bit messy, but we are roughly 50% level. 1440 down to 720, not quite, but almost. And more importantly, we have a clear 5-hour advance. So let's go down to a shorter term chart, look at that. Right, so again a 5-hour advance, nice and clear on this chart, there's a low. 1, 2, 3, quite a big ABC as a fourth, and then a 5th wave advance up to there. Nice and clear, followed by an A, B, ABC. Again, the first wave and the fourth wave can't overlap in Elliott Wave Theory, so that kind of doesn't work. 5-wave decline doesn't work there. Followed by this one, I think it's a B wave. Now again, this is much clearer. You know, we have a C wave decline due down about 900 perhaps. But there's little doubt this is a complete 5, which supports the case that the low's in on Ethereum, with a clear ABC down, giving us a buying opportunity in the next, well, possibly today, and things will happen pretty quickly, but maybe tomorrow, but in the next few days certainly, and a good solid move up expected at this point. Obviously not Elliott Wave Theory, like every other market technique, doesn't work all the time. So don't bet the ranch on an Elliott account and get to know how it works first, obviously. But this looks pretty solid, and I'll be using stops. I always limit risk. I buy to hold and I trade as well. So when I trade, I do tend to use stops. Don't always place them at the start, but it just depends on how the thing works out. But again, you must determine your own trading style. Don't risk money you can't afford to lose, basically, and take calculated risks that have a good chance of showing solid gains. So don't waste your time with small bets that with small returns. That's why, like cryptos, you've got the potential of large returns for small risk, which is what it's all about. Right, well, please leave some comments if you like the video below. I'll happily answer any questions I can. Please like the video if you do, and please get in touch. Any questions directly by email for that. So, thanks for listening. Bye for now.